So you've decided it's time to get serious and move out of the comfort of mum and dad's home, or get off that rental roundabout. It's a big step, but here's some simple guidelines to help the move go smoothly. The first step is to save for your deposit and upfront costs. The bigger the deposit you can save, the less money you'll need to borrow and the less it will cost you in the long run. Most mainstream lenders will lend up to 80% of the property value, meaning you need to contribute the other 20% in some way. This could be via accessing any government grants that you're eligible for, your savings, or using a parental guarantee based on the equity in mum and dad's home. Some lenders will lend to higher amounts using lender's mortgage insurance. However, this is an added cost and often a significant one. Speaking of costs, in addition to your contribution, you'll also need to be able to cover the upfront costs. These costs include things like stamp duty, conveyancing and legal costs, building and pest inspections, finance costs, and so on. Don't be caught short. Make sure you do your research and factor in all those costs, including moving into the house after you've settled. Once you're close to having your deposit saved, then it's time to visit the bank or a broker to obtain a pre-approval for finance. By getting pre-approval, you're better placed to know how much you can afford and be more confident to put in an offer when you find the right property. The lender will look for lots of information from you to help them assess your application. They will want to get to know things like where you live now, where you work and how long you've been there, how much you get paid, and what other expenses you have. It's a really good idea to have a good understanding of your own financial fitness before applying for a home loan. Make sure you don't have any unnecessary loans or credit cards. Make sure you know where your money's going and that you're confident you'll be able to keep up the repayments, and make sure that your credit score is healthy. If you get a knockback the first time, it's not the end of the world. Most lenders will help you to understand why your application wasn't successful and whether there are steps you can take to make your application more successful in future. Then, armed with your finance pre-approval, you can now start searching for your home. Owning a home is a long-term proposition, so it's important to keep in mind what you will need in the future as well as what you need right now. You'll need to take into account things like location. Is it more important for you to have a short commute to work or to have a relaxed and quiet lifestyle? Is it important to you to have easy access to retail, medical, educational or recreational facilities? Now, are there any future development plans that could affect the home in the future, for better or worse? Another consideration will be what type of facilities the home will need. How many bedrooms, bathrooms and garages do you need? Is it possible to start out with a smaller, more affordable home and build up to your dream home over time? What utilities do you need connected? Gas, electricity, high-speed internet, or do you need disability access? You'll also need to think about what ongoing costs or maintenance the home might need. If it's an older home, will it require repainting or recladding? How will you manage the lawn, garden and possibly pool maintenance? Or if it's an apartment, there'll be strata title levies to pay that may go up each year. Make sure you thoroughly research all aspects to give yourself the best chance of ending up with a home that you love and will love you back. Once you've decided on a home to put an offer on, that's when the rubber really starts to hit the road. Put your offer to the agent, who will then liaise with their client to negotiate the terms of the contract. You may be able to negotiate things like the price, the deposit amount, and the settlement date. The deposit on the contract may be as little as $1,000, but expect it to be more like 10% of the purchase price. And this will need to be paid to the agent when you sign the contract. Now, it's also recommended that you negotiate the contract to be conditional upon satisfactory building and pest inspections and also finance approval. This gives you an opportunity to withdraw from the contract should the inspectors find something that you're not satisfied with, or should the lender not approve your finance. Even if you have pre-approval, there is no guarantee that something hasn't changed or that the lender won't change their mind. Now the paperwork really gets underway, and it's a good idea to surround yourself with professionals that can help you through the process. So as I said, head back to your lender to get final approval of your finance, and then find yourself a conveyancer or a lawyer. Your lender and your legal representative will take care of most of the legwork, but making yourself available to sign documentation promptly will make their job easier and your transaction go more smoothly. Now this is the point where those upfront costs start to kick in earnest. If you've made your contract subject to building and pest inspections, you'll need to have these completed within the set time frame, and of course pay for them. Once you've signed the contract, it's important to insure the home as well, as you now have a financial interest in it. And your legal rep will also look to have their fees and costs paid too. This will include the most significant expense of stamp duty. So again, it's important to have the money readily available to cover those costs as they're required. Then on settlement day, your legal rep and lender will do the exchange of documents and money. Your lender will need you to make the balance of your contributions available in the days prior to settlement, so that nothing interferes with the process on the day. Once the exchange is completed, you'll receive the keys to your new home and can then take possession. So there's our 5 simple steps to buying your first home. Save your deposit, get your finance pre-approval, choose your home, get into the paperwork, then settle and move in. Congratulations.